Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to discuss more about pair trading. And I urge you not to skip this part because this is one of the most important part of the video where we are going to discuss more about the overview of pair trading. So what exactly is pair trading? So when I say pair trading, the idea is I am going to buy one stock and I am going to sell one stock with an idea that one stock is going to go up or the other stock is going to come down. So this is the basic idea. For example, let me give you a simple analogy. Let's say there is Infosys and TCS, and Infosys in a matter of a week shoots up around 20%, whereas TCS only goes up around 3%. And let's assume this is not news driven. There is absolutely no news, nothing. So the idea of pair trading is when these two are a pair, let's say Infosys and TCS are a pair, they usually go up together, go down together. So Infosys or TCS, because both of them are IT stocks, they go up together or go down together. Now there is a significant difference because TCS is underperforming Infosys by a huge margin. Infosys is already up 20%, whereas TCS is just up 5%. The idea now is either TCS should now shoot up to come close to Infosys, or Infosys should fall and come close near TCS. Or the other idea is Infosys will come down a little, TCS will shoot up a little, and both will meet. So this is the basic idea. So what you will end up doing is you will buy one stock, you will sell the other stock with the hope that they are going to converge. So the difference is going to converge. So now when I am talking about this, obviously the first question is what should be the time frame? So when am I going to say that the difference is significant, right? So I can't go back 15 years ago and tell that, okay, TCS has gone up around 10 times, Infosys has gone up only around 8 times. So there is a huge difference and this difference should cover up. Obviously that is not possible because in such a long period of time, fundamentals are more important than short-term performances. And here we are more or less looking at short-term performances, and that's the reason the ideal time frame will be somewhere around 2 to 5 years. So do not go for more than 5 years. That's the personal suggestion, because in the longer run it's more about fundamentals rather than driven by statistical factors. So ideal time would be, let's say, around 3 years. So around 2 to 5 years, 3 years would be something really good. So next, coming to the question, what should be the pair? Which two should I do? So can I do something like Bajaj Finance and ITC? So obviously that is going to be really bad, right? So I can't obviously tell 4 years back ITC was at 200, today it is at 200. Bajaj Finance is at 6,000 and it was at 1,500. So ITC should go up 4 times because Bajaj Finance has gone up 4 times. So this is a very bad analogy. Why? Because ITC is not a growing stock, whereas Bajaj Finance is a growing stock. So the pair I have picked here itself is very wrong. So this is not the perfect pair which I will be picking. So then how do I pick the perfect pair? So the simple way to pick the perfect pair is, one, it should belong to the same sector. Why should it belong to the same sector? The idea is if IT stocks go up, both the IT stocks will go up. If banking stocks go up, and I have chosen HDFC and Kotak, both will go up. Let's say there is a sector specific news. PSU Bank recapitalization. Now all the PSU stocks will go up, PSU bank stocks will go up. So if I have a private bank and a PSU bank, again the pair is not really good. The next question is, I have to have companies of similar size. I can't pick Happiest Minds and Infosys and compare them because Happiest Minds is a small company. Obviously the growth potential is much higher than Infosys. Whereas Infosys is a huge company, it can't grow as fast as Happiest Minds. So that's the reason. Next, the size should be similar. So for example, if I pick TCS and Infosys, I know they work on the similar size or similar scale. If I pick HDFC and Kotak, I know that the size and the scale is similar. So this is the next important factor to be considered, which we are going to discuss more in the video. So now coming to the last part which we'll be covering in the video, what is significant difference? So if TCS is up 3% and Infosys is up 2%, is it significant? Should I short TCS and buy Infosys? For this, we are going to use a statistical concept of standard deviation and mean, and we are going to measure. So for example, I should be able to tell that with a 95% confidence level. So I am 95% confident that this is a significant difference. Or I am something like 60% confidence that this is a significant difference. So I should be able to measure it. So whatever we are going to do today, so we will be telling that with 95% confidence, this is a significant difference, and if this happens, more or less one is going to catch up to the other. So we are going to learn how that is done. I know this is a quite big introduction, and this was necessary because you have to know what exactly you will be learning in this video before we actually move on to this. I hope you will like the video, and if you are also liking the content on this channel, please do hit the like button, subscribe and share the video with your friends. And you can also follow us on different social media platforms. The link is given down in the description below. Thank you so much for joining. Hi guys, welcome to this video on pair trading. In this video, we will first try to understand what is pair trading and how exactly to execute this in real market. And I'm going to give you a very basic framework. So there are various ways how you can execute pair trading, but I'm going to give you a very basic statistical framework on how to exactly do it. So the moment we say pair trading, we know that we have to enter two stocks or any two instruments. So that's why it is called as pair trading. And pair trading is a market neutral strategy, which means it really doesn't matter if the market is going up or the market is going down. So you're trying to see, or you're trying to look for some statistical significance to take the trade. So we will understand what that is, and we will then further move on to actually figuring out how exactly to do this. So here are a few important things that you have to keep in mind before you actually pick the pair to trade. So when I say pair trading, you have to pick two stocks. So either you pick HDFC Bank, Infosys, either you pick ICICI Bank and TCS, or it can be Maruti and say something like L&T. So the thing is, you can pick any stocks, right? Any random stocks. But when I say pair trading, the pair has to be very well defined. So first, when we are starting with pair trading, you have to define what exactly is the pair. So the first most important thing is when you're picking the pair trade. So this is my personal suggestion. So there are various ways how you can do pair trading, but this is my personal suggestion. One, you have to focus on large cap companies in the same sector. So this is one. So large cap companies in the same sector. The second most important thing is the companies should have very good fundamentals. And so when I say, for example, let's say we pick the sector of IT. So which are the two companies which satisfies both? One, they should be same sector large cap. Second one, they should have very good fundamentals. So when I say pick a pair, obviously everybody will tend to pick TCS and Infosys. So when I say, for example, private banks. So here again, I am very specific with private banks. When I just say banking, you can pick SBI and HDFC. But the problem here is public sector banks tend to behave differently sometimes. Private banks tend to behave differently sometimes. So when I mention private banks, so if something happens to private banks, so for example, I'll give you a simple example. During the time of public sector bank recapitalization, so all the public sector banks shot up, but private sector banks underperformed. So that won't happen if you pick in the same sector. So here you can either pick HDFC Bank and ICICI or HDFC Bank and Kotak. So I personally prefer Kotak over ICICI because it has better fundamentals than ICICI. So here I will end up picking HDFC Bank and Kotak Bank. So similarly, when I say, for example, two-wheelers, so two-wheelers, you will obviously end up picking Hero as well as Bajaj. Two very prominent companies, really big and large cap. So this way, you can create very good pair trading strategies using both. So we will understand how exactly that can be done. I hope you're clear with how to pick stocks. So try to narrow it down as much as possible. So for example, when I say auto, don't broaden your sector, because when I say auto, you can pick Bajaj Auto as well as you can pick Maruti. But Bajaj Auto operates in a two-wheeler segment, whereas Maruti operates in four-wheeler segment. So narrow it down as much as possible. So exactly be very specific with two-wheelers, be very specific with four-wheelers or private banks. So you should narrow your sectors as much as possible. And finally, guys, the most important one, the companies should have similar growth rate. So you can't pick a company which is growing at 5% and you can't pick one more company which is growing at say 30%. So this is not possible. Try to pick companies having similar growth rate. This is again really important and the last criteria. So all you have to do is go to screener.in, and when you're picking the stocks, so let's say I put TCS, right? Compounded profit growth as well as sales growth rate for 5 years, it's around 7 and 9%. So now if I go to Infosys, right, on the other hand, you can see that again the profit and sales growth rate is around 7 and 10%. So now these two are really big companies, and I know that their growth rate is also something very similar. Similarly, if I see Kotak and HDFC Bank, for example, so here I have Kotak Bank having a sales growth rate of around 10% and 24% profit growth rate. And we are going to see HDFC Bank. Profit again is growing around 15 and 20%. So you can see that it is quite similar. But what if I am going to pick something like say M&M Finance and Bajaj Finance? So you can see that Bajaj Finance is having a growth rate close to 28% for 5 years and sales growth of 30%. But if I go to M&M Finance, for example, the growth rate for a profit is minus 3%, and this is around 13%. So obviously these two are not a good pair. So to be a good pair, three main criteria are: one, it has to be a fairly large company and the companies have to be in the same sector. Fundamentally, both should be really good, and they should be of similar size and they should have similar growth rate. So these three are the main criteria for picking your stocks. So now we are going to see what exactly do we do in pair trading. Okay, so first important thing while actually we start to build a pair trading strategy is we need to have some historical data, because we are trying to find some statistical evidence. So we will have to download historical data. So here I have opened HDFC Bank from Yahoo Finance, and I can just download historical data directly. You can see here I have selected 5 years and I am downloading historical data of HDFC Bank. So I have already downloaded here. I am just downloading it again just to show you guys. Next, I will download Kotak Bank historical data. So again, this will be auto selected 5 years. So I'll just download Kotak Bank historical data. So now I have opened both HDFC Bank as well as Kotak Bank Excel sheets. So what I'll do is I will actually put everything into one. I will select all these columns of Kotak Bank. I'll cut everything and paste it in HDFC Bank along with HDFC Bank. We'll have it side by side. Okay guys, so if you look at this, you can see that the data itself is looking very clumsy because some has lot of decimals, some does not have decimals. So we are going to first make the data look little better. So we are just going to select this, then Control, Shift and down button, and then we are just going to keep it to 2 decimal points, right? And even this, we are just going to keep it to 2 decimal points. Before continuing, I would like to tell one more very important thing. When you're actually analyzing data, do not go for 10 years or 15 years data. And let me tell you why. That is because 10 years and 15 years down the lane, fundamentals of the company will be completely different. And from then on till now, it can completely change. So will the performance of the stocks, and so will the ratios. What you're looking for is more of a short term. So anything which is ideal would be around 2 years to 5 years. So do not go more than 5 years. Ideal would be something around 3 years. For 3 to 5 years anywhere, that should be good. So now how do we continue? First, we start by taking the ratio. So how do we take the ratio? I will take the ratio by dividing adjusted close of HDFC Bank. You can either take close price or open price, doesn't really matter. Adjusted close of HDFC Bank. So then I'm going to put a slash, which means divided by adjusted close of Kotak Bank. So I get a ratio of 0.774. So I'm just going to drag this down all the way. So here I finish dragging down everything, and when I do that, automatically everything gets filled. So now again the decimals is a problem, so we will just arrange it well. So I am going to restrict it to 2 decimals or 3 decimal points should be good. So after we do this, now what we are going to do is we need to know the average of the ratio. What is the average ratio? So I am going to take a average here. So average here, I am going to press Shift Control down and I am going to hit enter. So here it says value, which means there is some error here. somewhere there must be an error here. That's the reason you would have got that particular thing. So the error is right here. So you can see there is something called as null, null, null. So obviously it can't divide these values. It can't divide null by null. So it would have given you an error. So when there is error somewhere in between, so obviously you won't even get the values. So now how do we fix this, right? So I'm going to teach you a simple formula for that. So what you do is press equals if error. So we are going to use this formula. So first you are going to tell do something, like the value is basically divide adjusted close of HDFC Bank divided by adjusted close of Kotak Bank. So now if error, if there is any error when you do that, then you have to put a value. So we are just going to put 2 colons, which means the value is going to be blank. So there is absolutely no value. And we are going to hit enter. And all we are going to do now is you are going to double click. When you double click, automatically all the cells will have the same formula. You can see all the cells automatically get the same formula, right? And you got your average also, your average 8.11. Next, what we are going to do is we are going to take standard deviation. So compute standard deviation. So use stdev.p because you are looking for population, right? Again, select the same region, that is R2 to R1234. Hit enter. You are going to get your standard deviation. So I'll just place it over here. And again, I am going to reduce the number of decimals. After calculating average and standard deviation, now you know the average ratio should be 8.11. But here the ratio is 7.56. So does this mean should you buy something or sell something? It's below average, right? So does this mean you have to buy something or sell something? Or let's say here we go above average. 8.3 is above average. So what should you do when it is above average? So that is what we are going to discuss now. So to make your buy or sell decision, right? So to make your buy or sell decision, what you have to do is compute average plus 2 standard deviation, 2 ST, right? So all you are going to do is average plus this one, because this is 1 standard deviation, plus again T3 because T3 is 2 standard deviations. So this is one number which I get, that is 0.908. So next what I am going to do is I am going to do average minus 2 ST. So again average minus T3 minus T3. So average minus 2 times standard deviation. So I get 0.713. Before which I am going to tell you what is this actually meaning, right? So for example, we got an average of 0.8 and we got this thing of 0.05, right? A standard deviation of 0.05 and average of 0.8. So when I add standard deviation and average, for example, average plus or minus 1 standard deviation is going to give me a confidence level of 66%. So what does this mean? This means the ratio 66% of the times the ratio will be between 0.8 minus 0.05, that is 0.75 to 0.85. So 66% of the times the ratio is going to be between this. That is what 1 standard deviation is going to give me. So when I choose 2 standard deviations, that is average plus or minus 2 standard deviation, that is standard deviation into 2, right? So this is going to give me a confidence level of 95%, which means 95% of the times the ratio is going to be between 0.7 to 0.9, right? And when I use average plus 3 standard deviations, that is going to give me a confidence level of 99%, that is 0.65 to 0.95. So here we are using 2 standard deviation because we want 95% confidence level. We are not still happy with 66% confidence level. Let's aim for more. So let's aim for 95% confidence level of being right. So the ratio is going to be between this level for 95% of the days or 95% of the times. So which means if the ratio goes to 0.93, you know this is above the 95% of the time level, which means over time it is going to come back down. So or if it goes to 0.68, you know it's below 0.7, it is an event which is going to occur less than 5% of the times. So which means the ratio is going to come back towards 0.8. So that's the reason you are going to take a trading decision here, right? So now we will see what exactly to do when. So once the ratio is above 0.908, which means 95% of the times the ratio should be lesser than that, or only 5% of the times the ratio can be more than that. So what we are going to do is we are going to take a trade decision. And what is that going to be? So why will the ratio increase? When the prices of HDFC Bank go up and prices of Kotak Bank do not go up, only then the ratio is going to increase, right? So that's the reason we are going to sell HDFC Bank, because the prices have already gone up, and we are going to buy Kotak Bank. So similarly, if the ratio is below 0.713, we are going to buy HDFC Bank and we are going to sell Kotak Bank. So why will the ratio increase? If Kotak Bank prices go up more than HDFC Bank, the ratio will increase. So now we will actually look at it, right? So you can see this is the average, and we are going to look for a number above 0.908, or we are going to look for a number below 0.713. So you can see that as we scroll down, it's all trading close to average. So we have not yet found the number. So this is one thing, that you don't find trades all the time. So you are going to find trades only few number of times, right? So finally we come to 0.922. So this means the ratio, this is in 2017, the ratio is 0.922, which is way above 0.908. So obviously we are going to make the decision of selling HDFC Bank, because the ratio is more now. So we are going to sell HDFC Bank. Date is 28/12/2017 and 925 is the price. 925 is the price. I am selling a future at this price. So sell future and buy Kotak Bank. So here I am buying Kotak Bank at, I will see the average closing price, that is 1003. So at 1003 I am going to buy Kotak Bank. So you can see that within some days the ratio started coming back towards the mean. So here we come back all the way to, so when we come back to the average, you are going to exit everything. So till then you are going to hold your futures. When we come back to the average, you are going to exit everything. So here we are back to the average, and that is 24/4/2018. So the price on this thing is 953 and 1164. So you can quite clearly see here, this has gone up only 3%. You have shorted this leg and you have lost 3%, whereas you have gone long on this leg and you have gained almost 16%. So if you had gone futures, you can see how nicely you could have benefited from this. So this is a simple trading strategy what you can use. So you can see how well you would have profited from this particular trade. So now let's say I had shorted futures worth contract value of 10 lakh. So 10 lakh I have short futures contract value. So this I have lost 3%, which is 30k. And from this I have gained 16%, which is 160k. And I have made a pretty good profit of 1,30,000. So it is as simple as that. And to short a contract, short and go long on this contract value, the capital you would require is just somewhere around 3 lakh. So 3 to 5 lakh is what you require to do this trade. And you can see that how well you can benefit. Okay, so now we will look at one more example, the opposite example. So here you can see that is March 2020, the ratio dips below 0.71. So you can see we are looking for the ratio of 0.713, and this is quite clearly below 0.713, and we are going to buy HDFC Bank at 1151 and short Kotak Bank at 1651. So we are going to buy it at 1151 and short at 1651. So you can see in some days the ratio comes back to the average, and that is 16/7/2020, we are back to the average, and you can see the prices. The prices are 1062 and 1322. So 16/7/2020, the prices are 1062 and 1322. So you can see that this has just fallen somewhere close to 8%, whereas this has come down. So you are going to buy HDFC Bank, you are going to lose some money, doesn't really matter, because end of the day this ends up coming down 20%, which means you make a solid 12% gain. So this is how you are going to do pair trading, and this is as simple as that. Whenever you find a ratio imbalance, you're just going to go long on one and you're going to go short on another one. So here you might ask, we are going to get this opportunity very rarely. So once we got 2 years back, now we are getting in 2020. So how do we actually do this? The thing is, you shouldn't stick to a particular stock only, a particular pair only. Try Infosys TCS, try HDFC Bank, Kotak Bank, Hero as well as Bajaj. So try various stocks. So one or the other time you will always have a pair trade going on. So not always everything will be balanced. So one or the other time, if you have 10 such very good pairs, so one or the other will be always giving you the trade opportunities. So with that, we come to the end of this tutorial on pair trading. So you can see that if you find any opportunity again, since you already know the ratios, if you find any opportunity again with Kotak or HDFC, so right here in 2020 we found one opportunity. So here we are obviously going to go short on HDFC, go long on Kotak, so 1200 and 1300. So you can see that the ratio comes all the way from 0.93 to 0.78. So you can clearly see here, this which you entered at 1200 is again at 1200 only. So you can see here, there is absolutely no change in price, 1233, 1215. So there is a decrease of 1%, whereas Kotak has increased from 1319 to 1630. So which means there is a huge increase in Kotak. So this way you can easily do pair trading, and whenever you see the ratio dip below, again you can definitely enter, go long on HDFC and go short on Kotak. So this way you can create multiple pairs and try it out yourself. And if you are liking the content on this channel, please do hit the like button, share and subscribe. Thank you so much for joining.